Welcome to the newsroom. All right, so are you a bag holder right now? Did you just buy in and you're like, what's going on? The market's red, red, red. I need to sell. I don't know what I'm doing. I'm losing money. Is there going to be another crash? If you're one of those people, what are you doing? I'm going to help you out and give you peace of mind, let you know what direction the markets will be going, and I'm going to show you 3 of my favorite stocks for this week. Let's go. All right, so first, let's talk about why was there a market sell-off? What happened? There's a lot of things going on in this country right now, so is that a factor? Or is it simply a sell-off? Sell-offs are healthy. I like to call them cooling down phases, where the stocks come back down to reality. As long as they stay above where they were previously, that's a healthy move. And if you were one of those people that caught a little FOMO because you didn't buy before this rally or in the middle of the rally and you bought at the end of the rally, what are you doing? Okay, I'm going to help you all out. So first, let's go over SPY. I like to look at S&P 500 to get a good gauge for the direction of the market, where it's going to go going forward. So let's pull up SPY ski. All right, so we're looking at SPY. And as you can see, SPY rallied every single day for 6 days straight. Let's pull up the calendar. Here we go. Monday, Tuesday, Wednesday, Thursday, Friday, Monday. All green days before it had that bad red day. I feel like a lot of people are now questioning that it's a crash. Hello? We just had 6 green days. That doesn't usually happen. And on top of that, those green days were 20%, 25%, 30%. Some stocks went up over 100%. Every day. You were blinded by green days. If you're a new trader and you're like, oh my God, stocks only go up, this is incredible, and then you get hit with a red day, you're confused. I'm going to make it a little clearer to you. I'm calm. So let's look at SPY. Now, here is the market trend over those beautiful 6 days, and then that aggressive sell-off. Why did it sell off? Let's find out. I want to show you quickly how stocks move. So just to give you an idea, if you don't know, let me draw it out for you. So stocks move like this. They move in waves, like the ocean. Up and down, up and down. And if you're a good surfer, you can ride those waves. And of course, waves crash. They come down, up and down, up and down. As long as that wave is moving up overall, just trending up, it's a healthy stock. In 1 month, SPY went up 17% in 27 days. That's crazy. So for a rally to go on that long without an aggressive sell-off would be unhealthy. I prefer these pullbacks. Let's see how much it pulled back. Pulled back 8%. That's about 50% of the 16%, 17% run. That's fantastic, all right? Don't listen to the news. Don't listen to these articles. I mean, read them, but at least have your own opinion and know why you originally bought the stock in the first place. I know why I bought these stocks because I feel they're going to aggressively go up long term. I'm in them long. I have a long account and I have a day trade account. We got strong support on SPY at 300, and guess what? That's where she bounced. All right, so I have a bullish, I always do a bullish and a bearish scenario to let you know that I'm not biased one way or the other. So bullish scenario, I see it bouncing at 300 and holding at that level and testing 313. And then of course, waves, up, down, up. And then I see it breaking through that 313 at a later point. Bearish scenario, we could gap down. All right, we could gap down. I have a support at 293. And then if it falls below that, the markets are getting really bad. Maybe cases go up, bad stuff continues to happen, and the markets crack and fall, and that would be very bad. It's not something I would look forward to. Then we're most likely getting that W formation. All right, so that's the bullish and bearish scenarios on SPY. Overall, I think the markets are going to continue to rally, and they're going to have these pullbacks. These are normal pullbacks. These are cool downs. Just remember, you don't want to buy in 3/4 of the rally or at the end of the rally, or you're going to be stuck holding longer. And I have some examples to pull up I want to show you on actual stocks of what I'm talking about. So I'm going to pull up United here. So before this rally in mid-May, United was at $20. It had a bullish rally all the way up to $50. That's insane. And it sold off. Now, it sold off all the way down to 32 at the moment. That's still a massive percent. That's 70% to the bottom of the pullback. It's still up huge. So those people that bought in the high 40 range, I don't worry, I can help you. All right, so that's still 70% from 20 to 32 at that pullback. And I think going forward, I think this is the balance where it's going to stay above this 32 point. So let's talk about if you bought in that high 45 range. So that's a high entry. You got in at the end of the rally. You got in when that wave started to come over. Why? Okay, so there's your high entry buy, and you're going to have to wait. I drew this little squiggly line to show you how the stock is going to move if it continues to rally up. And now, at that 65 range, now that high entry turned into a good entry because now you're above that area, but you're going to have to hold. So, for example, let's look at how long you're going to have to hold with United. Just an example, this may not play out exactly, but it's going to give you an idea of what I'm talking about. Okay, so let's look back here. Late mid-March, you had a bad entry. You FOMO'd, you bought at the top, you thought the rally was going to continue all the way straight up. It wasn't. All right, it's going to bounce around. So, this is how long you're going to have to wait to be profitable. You're going to have to wait from late March all the way till mid-June. That's how long someone had to wait if they didn't average down their position. That's a total of 74 days you would have had to wait to get into a profitable area. That sucks. That really sucks. So you're going to have the same thing here. You're going to have a longer wait to be profitable if you bought at that high area. If you think the rally is going to continue, average down, get a better price, or you're going to be waiting a very long time. Maybe not 75 days, maybe 30 days, maybe 45 days, maybe less. But that's a quick example of United. I want to pull up another example of Ruth's Chris Steakhouse. So Ruth is another good example. It's an easy chart to read, which is why I like trading it. So if Ruth has a strong support at 8, anything you got under 8, nice trade, nice hold. Let me know in the comments if you were able to nail that. All right, so as I said, stocks move in waves. All right, so we have that sell-off there, and it's still higher. So if you look where the sell-off ended, it's still higher than if you would have bought it at that low before the massive rally. You would have bought it at the $8 range, and it's at $9.60. So it's still higher than where it was. That's good. If it would have fell below where it was in May, then it has a tougher time to get out of that area. And that wouldn't be good. I would probably stop watching Ruth, but because it bounced at this zone where it's still higher above where it was previously, I like it. So I'll continue to buy Ruth. We're going to consolidate, and then the rally will come again. It's just going to be a little bit because the stock has to do a little ping-pong bounce to cool down and then build up momentum and go again and let the FOMO people bring it up even higher, and then they're going to get trapped and peak out. So that's it for Ruth and United, just as examples to show you what that pullback meant and how long you have to wait if you are trapped in there. We all know, well, most of us probably know Warren Buffett's famous quote, money moves from the impatient to the patient. And this rally is a perfect example. So I have 3 stocks I want to talk about going forward, what you should be looking at for this week. I built this cool little Excel chart. It shows me all the undervalued stocks. I put them in there based on percentage. So the way this is laid out, for example, for SAVE, which is Spirit Airlines, the high before Rona was 55.20, and its current price is 18.72. So if you were to buy it at the current price, from there to the price before Rona at 55, you would make 194% return. So the stocks that I'm focusing on are the most undervalued stocks on this spreadsheet, and that's going to be the ones with the most upside, the most percentage. So I have it sorted by percentage. So I have Spirit, I have Play, which is Dave & Buster's, and I have Norwegian Cruise Lines, which is a cruise line. So I'm going to pull up those stocks and do a technical analysis on a bullish scenario and a bearish scenario for each stock. All right, so first one I want to pull up is Spirit. So bullish scenario for Spirit, it does have resistance at 1870. It's right on that line. So if it does clear it, it's going to go into a bullish scenario, and it's going to do this little lightning bolt scenario where it heads up and tests 25, 26, 27, 28, somewhere around there to find maybe a new resistance. But that will then make the 1870 resistance area a strong support area. So that's the bullish scenario. Bearish scenario, so if it can't clear that area, that means that the markets are still pulling back, and it's going to treat that as a resistance. It's going to fall down to its first support at 16.15. So if it breaks through 16.15, that means things in the markets are still getting uglier, which would be very bad, and it's going to test its second support at 11.77. Yikes. Let's look at Play next. So I'm just pulling some info from my chart last time. Strong support is still working at 15.11. It bounced off that area perfectly. it needs to test the resistance of 1879. If it could clear that, and again, this is with all stocks, the rally continues. It's going to bust through that, and it's going to test 28. If we have another strong rally after some consolidation. Bearish scenario, markets pull back, obviously again, it falls through 1511, danger zone. If that does happen, then we're going to have a strong support at 922, but it's going to be very tough to dig out of these holes. I don't think the market movers are going to let this happen. I think they're going to keep it above, because then it's erasing all the hard work it's done to get to that point. So I don't think that's going to happen. All right, and last one, I have Norwegian. Bullish scenario, we have, again, resistance. It looks like all of these are kind of lining up the same because they are following the markets. You see in these green boxes, that's where the resistance is. Resistance was created from back in late March. So it's hitting that area now. Again, just like the others, it needs to bust through there. And then we could test 28. If it pulls down, 16 support. If it goes through that, then it's going to get ugly, digging out of a hole. So they're all going to be digging themselves a grave if this happens. But again, I don't think the market movers are going to let this happen. I think we're going to continue to have a bullish rally. And I think it's all going to be very good. All right, that's it, guys. Thanks for watching. I did link the spreadsheet you saw in this video, the undervalued stocks, in the description. If you want a copy of that, it's free. Check it out. You can download it. I also want to mention that I do comedy videos related to stocks because I like to have fun with it as well, because all these stock guys, they're all so serious. So I put those at the end of this video. Check those out. I go to the business and I investigate them in person to see if it's a good buy. And I try and put a funny spin on it. And also, I just hit 1,000 subscribees. That's incredible. So thanks to everyone that subscribed. Guess what? Y'all are closer to retiring young.